And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, traders, friends, family, and futures friends, family. It is time for the market prep. Wednesday, May the 3rd. My name is John Hoagland. Thank you, as always, for trusting me with your time. Context is going to be elusive today, but we're always seeking it. We're always remaining patient and always thinking risk management first on anything that we do in these markets. It's good to see everybody this morning. If you're already in the markets, hopefully things are going your way. Lots of economic information this morning, some of it already out. 6 o'clock this morning, the 30-year mortgage rate, 6.55% was what it was last week. It came out a little bit lower at 6.5%. 7:15, the ADP employment numbers came out. Last month, it was 145,000. They were expecting 148,000. Came out much higher than that at 298,000 additional jobs. If we think that the job market is slowing, maybe we should double think that. The Treasury refunding announcement came out today. There's no changes in the auction process. It's going to be the same as the prior quarter. 8:45, the PMI composite final due out. 9:30, the EIA petroleum status due out. 1 p.m. Central, the FOMC announcement on what they're going to be doing with interest rates. Everybody is expecting a 25 basis point rate hike. 1:30, of course, Chairman Powell will have his presser. So we'll all be, I'm sure, peeled on what happens at the end of the day today. U.S. stock index futures still looking a little bit chipper this morning, remaining steady to higher. Again, lots of economic releases, FOMC earnings today, led by CVS this morning and Qualcomm after the close. So this year's meteoric rise in interest rates is starting to show, certainly in banking, in a slowing economy. They say in labor, but they may have to rethink that idea after this morning. And a slowing economy, again, as investors are hoping for a pause in rate hikes after today's expected 0.25 point rise in rates. I want to say thank you to Kevin. Kevin Laffey sent me some information after the reflection last night about what is going on with crude oil, and it really kind of goes with a lot of what I think was expected. He did mention a technical break below last week's low, of course. Distillate demand is down, mainly diesel, jet fuel, and heating oil. It's kind of indicating that slowing global economies. Russia, I guess there's an indication that they have not cut production as they threatened and have actually increased exports by 4 million barrels per day. So there's kind of our answers to what's going on with crude oil. My question is now, when does the White House come out and say, hey, we're going to start buying crude to replenish the petroleum status, the Strategic Petroleum Reserve, if that's in the plan, which it should be, don't you think? VIX this morning up a little bit, 1780. It was 1662 yesterday. Dollar index down this morning, 101.62. It was 102.18 yesterday at this time. And the yield on the 10-year at 3.4%, where it was 3.54% yesterday. Those are, of course, the last time I looked. Things could have changed. You know how fast things change in these markets. And we're going to see a lot of that today. Just a reminder, FOMC We may see some muted activity prior to that, as we do have a couple more economic numbers due out, which could change that. But my thought today is probably stay patient, wait for the market to accept and digest the FOMC meeting information, and then try and see if we can't find a way to profit after that. There may be opportunities today, of course. I'm thinking, we're going to see some pretty decent volatility at the end of the day today. It's not my favorite time to trade is during periods of volatility. I'll tell you flat out. I much prefer markets that are rotational or directional, but the volatility freaks me out, and I tend not to trade. I was seeing somebody here already putting in, cash is a position, and we'll see how that plays out. Context is something that we're always trying to focus on, finding accurate context. I think context is going to be changing throughout the day today. I think it's going to be elusive, and I think it's going to be, as always, they always are, challenging trading days. So make sure that you hit the lucky like button. Share, comment, question, feedback, and heckling and love are always welcome. Subscribe to our YouTube channel. You get notified when we do go live. Hope you enjoyed yesterday's Coach's Playbook. We talked a little bit about the things that you're going to want to put in your trading plan, and you should have a trading plan. It's your business plan. It's how you're going to be managing risk, all your information, and some of your expectations for how you're going to be looking at markets, the tools, the times, all of that should be part of your trading plan, and it is never done. It is a living and breathing document. So we went through a few of the things that we were thinking about yesterday on the Coach's Playbook. So again, hopefully you enjoyed those. So we are just kind of heading into the day today. Trying to think of any other thoughts. Just to, be careful, be patient, and survive the day. That's the goal. That's the goal. I've missed a lot of good trades, including one yesterday in the S&Ps. But hey, them's the breaks. That happens. I know over time that I'm going to come out okay. And so I'm going to accept the fact and move on and see what I can find today. Of course, context, important. Hypothesis, important. When your hypothesis seems to be supported by market movement, you trade to that hypothesis. That strategy is put in place. Again, context, I think, is going to be a little bit elusive today. Not that it isn't always elusive. We never know for sure if our context is correct until it proves correct. We never know when our hypotheses are correct until it proves correct. And we don't know the outcome of anything we do. So we're just working probabilities, looking for those asymmetric opportunities. Little risk for big rewards. That's what we're looking for you, and we are, of course, looking forward to your success. So let's jump into the charts here. Yesterday, we had a pretty deep move in the S&Ps. How did it do? How did that break perform yesterday? Well, I gave that auction process to the downside in the S&Ps and in the equities a D. We lost open interest. We drove price right to the center of last week's range and right between weekly kickoff high and low. We're still range bound in this area. Well, we know the FOMC is coming out today, and a lot of investors and traders have postured themselves for protection today. I think that's probably a good idea. We should all be protecting ourselves today. And look where the market is. It is right in the middle of range. Sometimes I like to allude to a tennis player. When the tennis player volleys it back towards his opponent, he moves towards the center of the court so that he can be ready to catch the ball if the volley comes here or if the volley comes here. And that's where we are. We're right in the middle. Thinking the volume was pretty good yesterday. Of course, it always is when there's a little bit of fear in the market. The VIX jumped a little bit of fear in the market. But what changed? Nothing. We're still range bound, and we're in the center of that range. It was a hollow break yesterday. Of course, anything can happen. ACH. It's one of our acronyms here, ACH. Anything can happen. Here's the 30-minute chart. Here's our big break yesterday. We opened with a gap. We couldn't close the gap. Opening range, the high of the day. That tells me I need to try and get short. Missed it by that much, but we had the right idea. That's all right. So we had the big break yesterday. We had the market, kind of put in a low here and then go right back to the center of the range, which we are in the center of the bigger range. Do we have any overnight inventory? Not really. Maybe a little bit long. No gaps. No spikes. No nothing. We're right in the middle of the range from yesterday. What did we accomplish yesterday? Well, we've been talking since last Thursday about a whole bunch of weak structure that was left in Thursday's price action, in Thursday's profiles. Take a look at it. So we put in a new recent high in the overnight session 2 days ago. The market takes a look lower, and what does it do? It repairs the profile from last Thursday. Lots of toothiness, lots of lack of confidence in a big upside move, right? So we just kind of came back to that area and we repaired it. We went to the assumed point of control in this lower distribution. We traded through the upper point of control in the upper distribution up here. So we just did a whole bunch of repair yesterday. It's a B-shaped profile, which is indicative of long liquidation, which is supported by the loss in open interest, right? Long liquidation, we would expect to see a drop in open interest, which is what we saw, which is why I'm giving yesterday's downside auction a D. I don't think it performed very well. Well, that may mean nothing to us later on today when the FOMC comes out, if there's something unusual, right? So I'm going to be patient. We're in the middle of the range. We're at the top of value. We are, it's a normal variation day that is largely neutral yesterday. So the big downside scary move didn't produce any new business. It took out old business. It didn't really move the market much in the longer time frame and just left us center, ready for any kind of movement in either direction in the day time frame and on the daily time frame. Patience. It's one of these mornings that I feel like I would love to just know how the day was going to end and to be able to tell you that. But of course, I digress. Nobody can. I didn't say good morning to everyone. What's wrong with me? I see Shaw. Well, I will do that at the end. Sorry about that. I get so, I don't know. I'm excited and I'm also remaining calm about today. But here's crude oil. Big move to the downside supported by a jump in open interest of approximately 22,000 contracts. This was not a hollow break yesterday. This was a good break. It seems to be showing continuation. That kind of proves that the auction to the downside did very well. I'm giving it an A. So take a look at the 30-minute chart. So here's the break yesterday, really just kind of settling at the lows. overnight in large part just hanging right at settlement. 2:00, the London session opens, sellers come back in, bring price down below weekly kickoff low. This is a naked point of control. It has not yet been checked in regular trading hours. There are two more visual targets below. Those are 68.66 and 66.80. 68.66 and 66.80. Those are TPO naked points of control. You got to go. These were placed back in March. So you've got to go really far back to find anything below that. So we may be cleaning up some unfinished naked points of control here in the next couple of sessions. But there's always a caveat to that. Looking at the daily chart, we've come a long way in a short period of time. I always kind of remain cautious and tell people to remain cautious and alert, because auctions are really never straight lines. We want to start being really conscious or aware, or just beware of counter auctions. They can be very illiquid and vicious. Not suggesting that it's going to happen anytime specific, but I'm always leery when we've come so far so long, so in a short period of time. So here's the profile from yesterday. Opening range, the high, IB extreme, the high, a big down move, a B-shaped profile, but that's not supported by open interest. There was more new business in this move yesterday than taking out old business. There's a couple of anomalies that are a little bit unnerving for continuation to the downside in the profile from yesterday, but a huge excess on the top. Almost a late spike to the downside. The market is opening and has opened with a gap, so we can depend on gap rules for early opportunities, perhaps. If we can't close this gap, which is very substantial, we're going to be looking for continued opportunities to sell. We do have some pretty considerable overnight inventory to the short side. That could be enough to bring us back to, how about a test of weekly kickoff low here for a possible risk limiter for us to the short side, if that's what we're thinking about doing. So what about the NASDAQ here? The NASDAQ. So, I mean, similar, but always just a little bit different than the S&Ps, right? We tested weekly kickoff high, rejected it 2 days ago. The overnight high was right at it pretty much yesterday. The downside auction lost 10,000 in open interest. Of course, volume was going to be higher, but again, the break off that high there feels hollow because we lost open interest. We took business out. We didn't add new shorts. So again, we find ourselves in range, kind of higher than the center. Makes sense, though. The NASDAQ has been presenting as stronger. But again, have we changed anything through the actions from yesterday? No. Take a look at the 30. Okay, IB the high, driving lower. We did not finish repair. Perhaps we did. And this is the high volume node here. Went right to it. So mostly repaired last Thursday's weak structure. When we came back, we closed, just below center of the range. Overnight inventory is a little bit long, and we're in range and in value. So again, stay patient. The markets are expecting some news. Well, oil regular session hours in Central Time are 8 a.m. to 1:30 p.m. in Central Time. So here's the TPO chart from yesterday, including the overnight. So here's where we moved to, and maybe that is just about enough for us to call this a complete repair from yesterday. But again, a B-shaped profile yesterday, big excess on the top, Kind of low excess on the bottom here, but these are 4-tick TPOs here. So we have some excess on the bottom. It's a normal variation, neutral day. A neutral day. Why? After all of that, it's a neutral day. But, overnight, basically just in range, in value, be patient. Be patient. What about gold? Gold performed pretty well yesterday. I'm not all that impressed. 13,000 in new business, new open interest. Yesterday's auction, I'm giving it a B because I think that open interest was good, not great. We didn't close the session, the regular trading hour session, above weekly kickoff high either. So we did bring in some new business. Volume was good. But the open interest, I don't think was all that impressive for a move of this magnitude. Let's take a look at the 30-minute chart and have a gander at that. So, here's a distribution, another distribution, P-shaped profile somewhat, but that's not a short covering because it's not supported by open interest. There was new business coming in here. Market traded right to and became magnetic to weekly kickoff high. Settlement 2023-30, 2024 is weekly kickoff high. So it just really hung there and just digested that new level as it did overnight. 7 o'clock bar, we had a little bit of gyration, but I still think we don't have any overnight inventory. We're in range, we're in value. And I think this market is holding here at a kind of a target-rich environment, right? We've got last week's high, we've got yesterday's point of control, we've got weekly kickoff high, and we've got settlement all within about $4 of each other. So this is a target-rich environment. I'm thinking that there's going to be some big fish under here in this area, but I don't know about direction. So I'm going to be looking for rejection of price above weekly kickoff high or acceptance of price above weekly kickoff high. Actually, this whole zone here is kind of pivotal for us this morning, if you ask me. What about the TPO chart? Whoops. Yeah. So a double distribution trend day, a good volume, and an increase in open interest. So the upside auction that we started yesterday up towards that weekly kickoff high did well, but it hasn't necessarily changed our market state just yet. We need to accept above that weekly kickoff high. Again, that's 2024. Couldn't close above it. Look at our regular trading hour high here, right up against it, not taking it out. It does offer the opportunity for us to limit risk at that level. However, all right. Let me put this back where it belongs. And we'll take a look at the euro. It's still in an upside digestive state. Upside move, falling into balance. So we're using balance breakout rules, but we're pretty far from either side of the extreme of this balance that this market is currently in. Yesterday, while gold, which is of course affected by the dollar, had a big increase in open interest, the euro has really just kind of cut off any interest. We added approximately 700 in open interest yesterday. How did we do the day before? Yesterday, we added about 100 in open interest the day before. So we're in a situation where people are just kind of holding. Well, of course, it's FOMC. Where are we in the area of balance? We're right in the middle. Our little tennis player is standing here waiting for the next volley to come in either direction so he can reach out and hit it back. So we're in upside digestion. Here's the 30-minute chart from yesterday. It's not... the market opened, it rallied, but it didn't do anything. We're still in range, still in value, still in balance, basically. We do have some overnight inventory to the long side, however. We've opened with a gap, and a sizable gap at that. Are we going to close the gap? we going to accept range and value from yesterday? Are we going to reject? Are we going to see an overnight inventory adjustment? An overnight inventory adjustment might be interesting if I was looking for an opportunity to get long. Yesterday, the NASDAQ I'm seeing the NASDAQ losing almost 11,000 in open interest. Oh, had a delta. Oh, okay. All right. Well, the S&P has also had a deep delta. We'll take a look at that in just a second. All right, Will? So, again, gap. What about the TPO chart? What's this going to tell us? Another double distribution trend day. Relative excess low. Weak high. Well, we're already above that level. We have a weak high here as well. Our overnight was right at that. So it was kind of a weak overnight high. It looks like we did look above that prior to the regular trading hour open here. But, this is... See, it's just complicating the day, if you ask me, because in the longer time frame, we're really range bound. In the short time frame, we're out of balance from yesterday's out of balance day, right? I mean, this was coming off the excess low in the balance that we're currently in. Just testing this naked point of control here, which might be somewhat pivotal. I don't know. I'm not in a hurry to trade this market because it doesn't seem like anybody wants to, with the lack of interest coming in for the last two sessions. All right. Here's the 10-year. So yesterday, volume was pretty good. We added 3,900 in open interest. 3,900. The open interest is over 4 million. That's a hiccup. It's unimpressive. Almost makes that rally kind of hollow. But we're getting new information today, and the expectations are going to be high. So weekly kickoff range, day before yesterday, check. Last week's range, check. We're range bound, but we're at the upper extreme here. Might be an interesting opportunity. But I'm thinking, just like context, acceptance or rejection is likely to be really kind of difficult today. It's always subjective and difficult because of the situation. I mean, even if it looks like we're accepting above weekly kickoff high, something that could happen from the FOMC meeting that could change that in a heartbeat. What about the 30-minute chart? Is this going to tell us anything? Overnight inventory, maybe a little bit to the long side, but it looks like this was enough time for that to reconcile. We've opened with a gap. I don't think we have an excessive amount of overnight inventory. So if we can't close the gap, that's going to keep us above that weekly kickoff high level. It's already been tested a couple of times since it came up above it last night, about 1:30 in the morning, 2 o'clock, whatever it was, and it's been supportive ever since. So this is this again is a pretty target-rich area. We've got weekly kickoff high. There's a naked point of control that we haven't checked in regular trading hours just yet. We've got value high from yesterday and the high of the range from yesterday. We've got settlement and we've got point of control. Target-rich area. If we can't come back and re-accept below that level, this market can move higher. Last week's high is in play also. So we have a weak high here. We have a weak high here, and our overnight high is also weak because exactness exudes weakness. There's no excess at these highs, and then the overnight, that excess gets even less. So again, we've got a gap. We can't close the gap. We look to continue the move to the upside. Again, that weekly kickoff level is in play here. It is 115.23. So here's that weekly kickoff level, which goes right between yesterday's range and this morning's range so far. Interesting things going on here in natural gas. So we had a big jump in open interest, 28,000 in open interest. I'm kind of wondering if that's a typo, but that's some pretty big open interest, and testing down to weekly kickoff low, now holding price down below that. Take a look at the 30. So down day, no gap close. Overnight inventory was short and they got paid. Testing to weekly kickoff low, didn't close below it, but it's got a little bit of overnight inventory to the short side. I don't think we've necessarily, I think we have closed the gap, but it might actually end up being resistant. Yeah, we did close the gap, but there's a weak low, excess high, IB extreme the high, excess high, weak low, excess high. We've been leaving excess at the highs for 3 days. It's a pretty healthy downside auction. I'm going to give it a B because I don't want to give it an A. Fascinating markets are. I feel lucky to do what we do. So, all right, let's take a look at this. Well, hang on. Okay. All right, let me go back to this screen here. So, this is the CTS-T4 platform. It's got a different way of presenting the profiles, and it gives you delta right here. So negative 17,000 in delta. It's a pretty big number, right? But think about the direction of the day. It's congruent with direction. It indicates whatever time frames were involved in the auction process yesterday, they were pretty aggressive sellers. I don't think it really means much for us today. If there was a divergence in delta, like we moved lower and delta was higher, that would alert me to the potential presence of longer time frame traders. We lost 10,000 in open interest yesterday. That tells me long liquidation, which is supported by the by the shape of this profile. The B shape indicates long liquidation, which is supported by the loss of open interest. I'm not really concerned that much about the delta from yesterday in either the NASDAQ or the S&Ps. I mean, negative 38,000 in delta. The overall direction was to the downside, and we again in the S&Ps, what did we lose? 18,000 in open interest. B shape, long liquidation supported by the drop in open interest. I'm not worried about the delta as it relates to today. Today can be it's a whole different day, and with the FOMC coming out, who knows what's going to happen. So I don't think, because of how range bound really we've been in the S&P, range bound, NASDAQ, range bound, that it's going to have much of an impact on the market today. Well, now if there's an auction where open interest is increasing in a direction, that's something I watch for. And then if delta is the opposite, of course, that's something I'm going to be looking for. Will, I don't know if if you come to group coaching, there's a wonderful explanation here. Vlad, I see you. I haven't had the opportunity to do my research in silver here just yet. So there's an explanation that occurred, I think it was even last year. Hang on a second here. Yeah. Okay. This move here was more than $200. More than it was a big move. And it was indicated by increasing open interest up to about here, and negative delta every day up to about here. So the open interest increase on this move to the upside with delta negative every day was an indication of a much longer time frame presence that ended up actually really getting paid on this move. It was a $200 move. So we can go over that during group coaching one of these days, and I can show you how I collect that information and how, at the very least, having that information can keep you out of trouble. Yes, long liquidation sounds like long-term money. I'm sure that long-term money was adjusting inventory for today. Shorter time frame, larger speculators are, posturing themselves, possibly getting out of positions for today. And of course, short time frame traders should go into this thing flat. That's just how I look at it. I've taken a lot of positions into some pretty big economic numbers. Proof is the color of my hair and my beard. I've had wonderful days. I've had horrible days. If I add them all up, I break just about even from all of my activities with holding positions into major economic releases. So if I'm going to end up even at the end of this, I'm just not going to do it. I don't view it as something that is in my best interest, right? It can be wonderful. You can have a really big winning day or winning trade, but you can also have a horrible, horrible losing trade or losing day that could take you a month to get back. I mean, I just don't view the high volatility as in my best interest. And that's just me, to each his own. Some people think that that they are going to be able to be consistent and profitable in high volatility, highly volatile environments, but not me. So I didn't say good morning to everyone. Shaw is first in the room, winning the prize. Good morning, Charles Mikhail. I think that's the way that's pronounced. Let me know. Stephen, Brian, Dan Trader, good morning. Shy, Bill Phillips, Timmy, Sarah Hall, prayers and love to you. John, Tom Gross, 300 away from completing step one. Let's do it. But just take that out of your mind. Today, you start from zero. Stay in your process, stay in your strategy, and you will get there. You will get there. But if you focus on that and you trade to it, it's going to take you out of your strategy, and it tends to make things go the other way. So just forget about that, Thomas, and focus on staying in your process and in your strategies. Well, good morning. Yeah, whatever happened to them buying oil to replenish reserves, right? I don't know. I don't know what any politician is doing or thinking, or if it's for them or us. Austin, good morning. Rusty, Scott, Sonny, Concord, Harry, Kamal, Jason, Travis, good morning. Haggle Matters, Robert, Terry King, Gnostic, Joe, good morning. Will, Shouldn't we be having a collective breakdown now based on those employment numbers? Well, I mean, they're hoping that the employment is going to cool off, and by that number, maybe not, right? Andy, good morning, my brother Rick, love you. Henry loves those bell curve days, right? Trading research. Vince, good morning, Henry. Alejandro, JT, good morning to you and Bluebell. Bear Goes Long, good morning. Torres, Pete, Bruce, Rich, Will, Vlad, James, JD, Philip, Real Deal. Yes, we do still have those TPO training videos. They're on our YouTube channel. Oh, by the way, today is group coaching. There's the link. So you can join me for group coaching today. And Real Deal, if you want to take a look at those, I can show you those during group coaching. Looking forward to seeing everybody there. Will, good to see you. Thank you very much. And Charles. All right, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Good luck. Watch out. Context is going to be slick today. S&Ps, they're all still looking somewhat chipper here this morning. At least they're green. So we'll see what the day holds for us. Be kind to yourself, be kind to others. Pray for peace. We need prayers for peace. Blessings to you all, and we'll see you later on.